All right. Who doesn't love rock and roll? Come on
Yes,
now.
yes.
Good morning. Today's music is from Joan Jett, and it's I Love Rock and Roll. So I hope you guys enjoyed it. So I'm just trying to bring a little bit of the fun rock music to you guys while I enjoy doing these type of podcasts and shows. Good morning, Pedro. How are you today?
Doing very well. How you doing?
Awesome. So, I wanted to welcome all our viewers and our listeners. Um, Welcome to Coffee Time with Marie Teresian CPA. If you are a returning listener or a viewer, welcome back. If you're new to the show, give us a thumbs up in the chat so we know you are new. Of course, for listeners that doesn't work, that's okay. Give us a like anyway. Go ahead and subscribe, like the channel or the page that you are watching us on. Make sure you click the subscribe button, the alerts, all the stuff you can do. Please. So you know whenever we go live, which is every Thursday at 10 o'clock Eastern Time on Facebook and YouTube and on LinkedIn. So I am your host, Marie Teresian. I'm a CFO, an auditor, a certified public accountant, and a chartered global management accountant. I use my proprietary and registered methodology Valuation MT to help businesses that reach their first million to 10x their profits. I also have a matching e-course that you can, kind of study on your own, and you can access that on the profitlab.biz/programs. I'm also a Grant Cardone licensee, and I coach businesses in sales, marketing, finance, and money mindset. You can find some of the plans over there on the profitlab.biz as well. Also, I've authored a couple of books, The Complete Guide to Business Growth and The Business Owner's Guide to Operational Accounting. So that's also available on the profitlab.biz/shop. My colleague Pedro is the one that's my featured guest every episode. So Pedro, please reintroduce yourself to our audience. Maybe those that are new, so they get to know you.
Exactly.
Yes.
Well, good morning, everybody. My name is Pedro Gonzalez, a CPA, business and tax strategist. We help our clients with improving their cash flow, minimization of taxation, and exit strategies. Cash flow is the lifeblood of any business, regardless of size and industry. Taxation, as we know, and I know this in the mind of a lot of people right now, is erodes wealth. And exit, we all gonna exit. It just depends on how we're gonna exit. So now's a good time to start planning, to start strategizing on all of those fronts.
Absolutely. And just a quick review of some of the episodes we've covered, the subjects we've covered before we get into today's conversation is, we've covered tax planning. So really go back to some of the episodes about tax planning. You're going to learn so much about that. And as the year is getting to a close, we're kind of like in the last few months of the year, you really want to start thinking about tax planning and what are the next tax regulations going to affect you, your business, your personal income, and all that. So go ahead and check those out as well. We're going to be talking a little bit on that today as well. And we've talked about, financial audits, IRS audits. We've talked about E2 Investor Visa, business plans and projections. I mean, we've talked about a lot of different areas of business and how, strategies that would help you from accounting or just general business and taxes. So today's conversation, before I say that, last week and the week before, we specifically covered some messy books, guys, that I've been working on 3 clients right now simultaneously, cleaning up their books. And I have to say, how many times, I don't know, Pedro, you and I have said this, it's so important to find the right accountant and the bookkeeper to help you keep your books clean. I'm seeing so much random journal entries being put in there that and or things that are missing, and the tax return and the books are not matching at all. So please, guys, please pay attention. Go back to some of the things we covered in the messy books the past 2 weeks so you can pay attention to what's going on in your books. Okay, so today specifically, we're going to come back to the conversation. We did talk about Inflation Reduction Act when it initially passed. But we covered it at a very general, ideas of the key points. But today, Pedro mentioned that, you mentioned that there's so many of the business owners, since you're on the tax side, they're asking you how this is going to affect their business, right? What is this law going to do to their business? So that's why, guys, we wanted to make sure that you have all the information you need and how this law is going to affect your business. So with that, Pedro, I'm going to open the floor to you to kind of walk us through some of the key things that's going to affect business owners from this specific law.
Yeah. So as you mentioned, since the passing of the Inflation Reduction Act, a lot of people are concerned about the impact. I mean, some of the aspects of the law, as we mentioned before, it's not going to affect a lot of the small business owners. Mm-hmm. But the concern is the area where the funding that is going to the IRS, and how is that indirectly going to affect them, because it is the enforcement part of the plan. One of the recent criticisms that the IRS is getting is that they have been saying, including Congress, stating that, well, this is to help taxpayer, to help in the backlog. But when you look at 4% of the funding is actually going towards what we consider to be helping in those areas, then you got to wonder how exactly the other 96% is supposed to help the taxpayer. We mentioned before that while the IRS has stated multiple occasions it is not intended to affect the taxpayers under the 400,000 threshold, doesn't mean that you might not be audited. You know what I mean? So because nowhere says that you will not be affected, they're saying, well, it's not intended to be that way. So that has caused some concerns, of taxpayer. I think, concern is healthy. Panic, I would not, recommend to panic. I think what you have to do now, and Marie has mentioned it already, and I will reinforce, is how can, the focus of today, I wanted to say at least a couple areas that I can see that can be, that you need to pay attention to if it applies to you. One is, as Marie already mentioned, messy books, because that's the foundation of business. You know what I mean? Yes. If you have messy books, I would encourage you to start cleaning up that. And if possible, I will actually encourage you to go back because, again, they're not auditing. If they were to start right now auditing, they're not going to be auditing 2021. They're going to go back to 19, 20, you know what I mean? So if you have or have had messy books, I would encourage you to. So that's one of the recommendations that I will make is, to truly, look at that, because that's going to be how you potentially get yourself into trouble. Even if you can, substantiate the transaction, it might be reasonable. They're going to be asking for financial general ledgers as part of their audit.
Yes.
So that's to start, I would like to start with that. I mean, to make sure that if you do have that situation of messy books, to look at that. So in addition to that, the income level. We mentioned this in a previous podcast, that it is surprising, and a lot of people are surprised that the highest percentage of people get audited is not the $400,000 and above, is actually in a range around $25,000, $30,000 adjusted gross income with tax credits. So that catches a lot of people by surprise, but it makes sense. I mean, again, you got to understand that you and I that have done audits of financial statement, we look at what we call audit risk.
Yes.
And so it's not that we're trying to pick on you, is that this is where we find where the highest risk, where the return on our investment, our time, is going to yield the greatest results. And it is a fact, and you can get upset about it, but what you ought to do is then, okay, so how can I prepare myself? And that's the purpose of this, not getting into the politics of this, but what can I do to protect myself? If you fall into that category, is make sure that you have, for example, the documentation as far as what kind of credits you received. We have asked people about the economic impact payments. You should have received a letter. Make sure you have the documentation to support your credits. Whomever's preparing your taxes, I know that a lot of people do not understand taxes, but at least sit down with your tax preparer and confirm that the amount reported is correct. Your dependents' names, socials, the number of dependents, the amount that you claim that you received, if in the form of advanced tax credit, for example. Make sure that look at that area carefully, because if you fall into that group, you have a higher probability of getting audited. And audits are not always going to be in the form of being physical or visiting you. It could be in the form of a correspondence audit, meaning that they're going to, before they either send you a refund, in some cases, people are getting adjustments automatically. They're just removing the credit because they are making a correction. And then they're telling you, we adjusted, in essence, we adjusted your return, and instead of receiving the quote unquote refund of $5,000, you receive $1,000 because we removed $4,000 that you claim as a credit. Now it's up to you to prove it otherwise. So, those are at times, and then imagine you now dealing with the IRS where the response is very slow, including for us. I mean, we as professionals, we also have a challenge. That's why I'm encouraging you is to invest the time on the front end. I mean, don't wait for the IRS to contact you, because they'll send you a letter. They took the money out. Now try to go after the IRS to prove that actually it is their mistake.
Yes. Yes.
You see what I'm saying? So the income level, I would say that to be cognizant of that. So that's one of the red flags, is especially if you receive credits. I would double and triple check that information before it's transmitted. High amount of deductions is another area that you need to be, again, aware, and make sure that it's properly documented. And that goes back to the bookkeeping. Make sure that your expenditures are properly documented. They're supported. Not only that they're in your QuickBooks, is that there is supporting documentation for that deduction. And I know that in your practice, I know that you also do the attaching invoices to the transaction.
Right. Yes.
That is, to me, right now, I look at that as insurance. If necessary, I'm telling you, it's better to go back if necessary, and start looking for those transactions, start
absolutely.
that data, start looking for those invoices, start attaching those to transactions, especially the major transactions. I know now might be hard for you to go back to 2019 and find that receipt for a business meal of $200.
Right.
But if you incur major transaction, either purchase of property, equipment, you know what I mean, at least as a minimum, leases, for example, you'll be surprised to think that they're going to go and ask you, but if you have leases, even if you can show, but look, I pay every month $1,000 to ABC LLC, is that they want to see the contractual agreement. So make sure you have your leases in place, that you have your not only office lease, but equipment leases, that you have your purchase agreements. You see what I'm saying? So make sure that those major transactions, you have the documentation. And I heavily encourage that you do spend a little extra time in looking into those, and then look at the reasonableness. And this is something I know that you and I do a lot. That we, after everything is done, then look at how is this reasonable based on the level of income. I mentioned in the past in a couple of podcasts, I've been working on a couple audits. I'm getting more referrals for audits, the individuals getting audited.
Yes.
And you'll be surprised that some of they'll tell us. I mean, what was the reason why they got picked? Well, look, Pedro, look at the travel. The 2020 returned with $20,000 in travel expenses. It doesn't make sense.
Right.
2020 was a lockdown.
Right.
You know what I'm saying? So it's not
no way they traveled that much.
Is that something was put in that return that immediately, in essence, is a red flag. And so that should be something that should be carefully. And now, is it possible that they actually incur? So you better have the documentation.
Right. Exactly.
You know, it
Exactly.
might be that you did somehow you managed in spite of the lockdown, you managed to do some travel for business, and so you
Right.
have to have those documentations in place. So look at that. So again, high deductions. Not that I would not advise you to go to the other extreme and say, well, I'm not going to deduct to prevent to be audited. Is that invest is in the proper documentation. You should not cheat yourself of deductions.
Of
So
course. Of
you see
course.
what I'm saying? So
Yeah.
my warning
Yeah.
here is the documentation, not to cheat yourself of deductions, so I don't become a target.
Right.
Uh, the other red flag is going to be the entity of choice. We have discussed this. We did
Oh
a
yes, we have. We
webinar.
have.
The entity of choice, and again, it surprises people that sole proprietors have a higher probability of being audited. So you have to take into consideration if this may behoove you to switch into an LLC, even if it's a single member LLC or some entity
Mhm.
where your transactions are no longer in your tax return. You know what I mean? Creating an S corp, for example, where now the S corp have a lower percentage rate. So you can take your same transactions, the same business, and switch it from a Schedule C into an S corp, and
Right.
reduce your chances of being audited. So those are a couple of things I wanted to mention. How again, through the conversation we're having with our clients and other people are approaching us in concerns about what can we do. You know what I mean? Again, in spite of, can the IRS hire 87,000? I don't know. They have not. They have not
Yeah.
made it official. I know that's a number has been thrown around, and my goal is not to scare you. Is to what is reasonable. Regardless if they hire 80 or so thousand. My opinion. I don't think that they can hire that many. Look at how challenging it is, the
Of
labor market.
course. Yes.
So, but at the same time, I will not say, well, don't worry, because they are not going to hire 80. They might hire 50. They might
Right.
hire
They might
20.
have 40.
There's no improvement on their staffing.
Yes.
So my suggestion is to prepare to invest some time. And again, I think that the best investment you can make right now is in your bookkeeping. That
Exactly.
Pat's
Which is tax deductible.
it is tax deductible, exactly. And invest in quality. You know what I mean? And people
Exactly.
that are knowledgeable about the accounting. It's
Yeah.
not about, like you mentioned, and I'm not going to continue. But go back to those episodes where you discuss about the proper accounting. But in
Yeah.
addition to that, supporting having the supporting documentation. Because
Absolutely.
again, you can have very good bookkeeping, but if you lost your backup, then
Right.
it's almost like a what they call it, the three-legged table. You know what I mean? You
Yeah.
almost so it's a little wobbly. I mean,
Literally.
everything
Yeah.
kind of,
Exactly.
you know what I mean? You kind of it's
Exactly.
kind of there. They might look at it and say, yeah, it makes sense. You have your bank statements, but you're missing is
Right.
the supporting documentation. So I will
You
highly
just
recommend that.
you just help me remember something. Like, for example, I'm noticing that certain people, they're relying on their online banking to have their bank statements there and never download them. So,
Yep.
for example, I noticed in one of the books that I was cleaning that, for example, one of the credit, actually 3, 4 of the credit cards where I had some negative balances. I'm like, and when I went in to check, I'm like, oh, this has never been reconciled. So I'm like, okay, so we should probably reconcile this. And the response back was like, well, we have no more access to that bank.
Mm-hmm.
I'm like,
Yeah.
okay, so, and where's the statements? Oh, we don't have the statements either.
Right. You have
Okay,
to
so how do we
order it
fix this now? So now you have to go and request and all that stuff. Now you can
and
wait,
pay.
and pay for it to have access to that. So it should be part of your team's, systematized ways of how you close the books is to download the statements and then reconcile. Always have a backup. So even your statements are your backup.
Yeah.
Because if you lost your receipt, at least you have something in the bank statement as a proof.
Yeah.
So you really have to have that, because there's no way we can go back even clean anything if we don't have access to your statements. Mm-hmm. So definitely, you just prompt that to my mind right now.
No, it's a good observation, Marie. You got to look at your bank, and you cannot rely that it's going to be there permanently.
Right.
You have to download that information. those bank statements needs to be downloaded and saved in
Yes.
your storage, because different banks have different policies on how long those statements
Exactly.
will be
Exactly.
accessible on their portal.
Yes.
And then after that, I'm sure, I think all of those banks, if you need, they'll kind of you have to order and you got to pay
Yes.
a fee per page and things like that. So
yeah, absolutely, absolutely. So it's important to have a specific system of like month end closing. These are stuff that we've worked on so well. So if your team is not performing as the way it should, we're always happy to come train your team as well to help make sure there's that system that they can follow, and that way you have a good system in place that everybody's doing the same thing, and it's repeatable by anyone that's coming in if you happen to lose a staff member. So yeah, that is very, very interesting. You brought up a lot of points, and I did put it in the comments. I was trying to type in as fast as I could, as you're saying something. So we talked about some of the red flags was like, make sure to go back and check your books going back to 2019. Anything that seems to be out of place, make sure that you have all the support documents for those. One of the red flags is anyone that has a lot of tax credits, so that's going to be a red flag. So watch out for that. Verify all the information that it's being submitted every year. So just don't assume everything is correct in the tax return. Just verify with your book records. So take your time to sit down and review with your tax preparer to make sure everything is. I mean, we're human. We're typing stuff in. Something can go wrong, and you want to make sure that it's being reported correctly. And if something doesn't seem right, ask the question. They should be explaining that to you. So any red flag is high amount of deductions you mentioned. And then let's see, entity of choice. So sole proprietors are going to be more prone to like being picked for a possible audit. So those are very, very good pointers, Pedro. Thank you for sharing them. Yeah.
Yep. The other area, and I'll mention also briefly, I know we discussed this before, is the 1099 case. They're going to be
right.
And that's another area of concern that even though it's not directly related to the Inflation Reduction Act, is another thing that keeps popping up, especially now. At the beginning when this came out, I think we discussed it kind of immediately once it came out. But the concern is that how are you going to manage? And the IRS has not helped providing specific. For example, transfers between two individuals, you and I sent you, $600 in Venmo, and will Venmo take the time to allocate that? Well, this is not a business transaction. This is simply Pedro sending $600 to Marie, or are they gonna simply take that? Which most likely this is what the suspicion is. These companies are not gonna take the time to try to allocate what is business, because Marie, in addition to receiving transfers that are not business, she also received business transactions.
Right. What if they put them all together?
Exactly. So they're gonna say, Marie, here's your 1099, X amount, because you exceeded the 600. Now it's gonna become a situation for you that you have to now segregate that. If especially not so much for you, for us, because we will have a business account, like you probably have a business PayPal, and I'll only use it for business. So that's
yes,
it's mainly for the entrepreneur that is doing kind of the gig. We talked about this.
Yes, the gig.
Doing the kind of the side business. I'm gonna sell some things in eBay. That is the one that's causing some concerns, because those individuals, they are not set up in a business format. This is what we discussed. They typically are doing this on the side just to dispose of some old pair of jeans. So let me put it on eBay and now try to figure out what the cost basis of that is. I bought this pair of jeans, 5 years ago. I don't know how much I paid for that.
Yeah.
Now, because I happen to be over the $600 threshold, I'm gonna have to now report deduction or expenses, so then I can reduce the potential exposure to taxation. Because again, remember that $400 is a threshold for self-employment tax.
Mm-hmm.
So if I already send me a 1099, I'm gonna be subject to self-employment tax.
Right.
So this is gonna be a headache for that group of people. You know, the people that are getting into the eBay, you know, doing kind of a little bit of Amazon, but I'm not
Right.
really in the business. You know what I mean? So those individuals, and then I use the same Venmo, the same PayPal to receive transfer between a reimbursement from my friend. We went out for a pizza, and
Right.
he or she sent me kind of his or her half of the
Right.
expenses,
And it gets pulled into
exactly.
yes.
How I'm gonna now separate all of this? But again, that IRS has not provided clearance about this. Now, one of the things that's being circling around is increasing. You know, there's a proposal to increase it to 5,000. That will alleviate
Right.
the,
Right.
the
That makes
small
sense.
taxpayer, and I think it makes sense. I mean, 600
Yeah.
to me was
600 is so small.
yeah, it is a very small
And
amount.
it's super
That basically,
tedious.
I think they estimated that the 60, almost 70% of the individuals that have the $600 or more is typically the eBay type of individual selling household items.
Right.
You know what I mean?
Right.
So
Right.
it's a person that
Getting rid of stuff from the house. Yeah. Exactly. Instead of
exactly.
doing the
I
garage
need
sale,
the
they're just
closet,
putting it on eBay.
and I have this a couple things in here. And
Yeah.
yes, I mean, you know, in the process, I sold, let's say, $800 of, you know, knickknacks that I had accumulated,
Right.
and I sold them. You know what I mean? So I generated $800. Now I'm gonna get a 1099. Pedro, here, $800 that I have to now figure out what was my cost basis of that, of
Mhm.
items that were sitting in my closet for many years, and now I'm selling them. So
Right. Absolutely. Yeah. I think it's such a burdensome thing for, you know, an individual just to track all of that for such small
Mhm.
items. Absolutely. It's definitely too much. So we had another little area to discuss. So this is, I think we have a little bit of time. We can go over a little bit, you know, because we try to stay within 30 minutes. So another something that's been coming around and some of the business owners have been talking about, and you mentioned it too, is that how to handle difficult clients,
Mhm.
difficult customers. So we've all had those type of experiences, you know, and so maybe you can give us a story about, let's say, the specific example you had, and then I'll jump in as well. So, and then we
Yeah.
can kind of give some ideas to those who are listening.
Yeah, and I'm sure that a lot of the listeners probably can relate to this, especially if you own a business with
Yes.
the labor market the way it is. A lot of the pressures that we're having, you name it. I mean, you know, we are all under a lot of stress. So I was meeting with a business owner, and he was telling me the challenges. I mean, the times how some of these clients, in at least in his opinion, were unreasonable with the delivery, and we're getting to points that we're delivering beyond of our original expected deadlines.
Right.
And so you know, he was I guess in a way venting a little bit about his frustration about how, you know, what do I do, Pedro? You know what I mean?
Right.
How do I manage this situation? And you know, and especially if the hard decisions. I mean, because we have to
Right.
also look at our resources, and we
Absolutely.
have to see where's our resources, especially in this market that we have. Where do you going to invest your limited resources? Either be the human resources, your financial resources, your
For sure.
time, in where you're going to invest that. And so that's kind of what originated the topic, or at least a conversation between you and I about it.
Yeah. And I think when you first start out as a business owner, I think, you know, we all go through those challenges at, you know, different times. But I think for me, in the beginning of my journey, I did have a client that became excessively not only demanding, but almost the tone of discussions, the tone of, you know,
Yeah.
of communication became so difficult and kind of like being talked down to. It just made me feel very uncomfortable and
Yeah.
very stressed. Actually, was really affecting my
Yeah.
happy self. So and sometimes we do need someone to talk us through it and to kind of help us go through it. And in my engagement letters, I always have the choice of anybody can step away from
Mhm.
the engagement. So and whether it's a any kind of transaction it is, whether it's a service-based industry or something else, I think you're going to have to make the choice of where is it worth the money, let's say, or is it worth the headache? Is it worth the stress? And I think for me, it was like, no, it wasn't worth any of it. So I had to, from my end, what I did was I brought into the conversation the fact that, we had agreed on 1, 2, 3, 4, 5, say, and now it's becoming 10, 20. And on top of that, I did not appreciate the tone of voice. And so I'm happy to finish 1, 2, 3, 4, 5. And that would be the wrap up. I will not move forward with anything else.
Yeah.
And that would be the end of the engagement.
Yeah.
And the reaction was like, oh, wait, that's not what I wanted. That is not it. And just hang in there. I'm just going through a lot of hard time. And I'm like, great, I understand. All of us go through hard times, but there's really no reason to talk down and make people feel bad, because we're all trying to help you. I'm here to help you, So I think it's important to have those kind of difficult conversations sometimes. Yeah.
Just like any relationship. I mean, you have to work first, see what can be done to gain a level of understanding.
Right.
Of how we are going to transact. In this case, it's a business transaction. How exactly I'm delivering you value. Are you pleased with my service? Yes. Okay. So then let's then understand why am I receiving this in exchange, and at least gain a point of understanding. Now, like any relationship, I will not encourage anybody to be in a bad relationship. You know what I mean? I understand about being, mediate, about understanding, but in any kind of relationship that is abusive, is demeaning, you should not participate on that. So I think as hard as it is for business, and I know that happens to business owners, is that they're looking at this as a stream of income that is going to part. But you also have to understand the amount of energy that you're devoting, and then the rest of your clients are not receiving the best of you either.
Yes, very good point. Very good point.
You gotta keep that in mind, that you're not delivering this over here. The situation over here is drawing a lot of energy, a lot of resources from you, and the other ones are suffering. So you might end up with no business. You know what I mean?
Right, exactly.
Trying to keep this one,
and then yes. It's like putting all your eggs in one basket, while the other ones, So, I think for me, the end result was really great, because we wrapped up the engagement, and then in the meantime, I had a couple of other businesses that I was helping at the time, and this was one of my initial, I guess, first time, kind of experiences. It was very difficult emotionally to handle it, but I'm glad I got to feel it at the beginning stages of my, entrepreneurship journey. And it was super helpful, because now I know exactly what I want. I know who I want to work with. And if it's a client that doesn't seem to be matching, I really don't want to work with them.
Correct. Yeah. No,
like you said, it's going to take too much energy away. And it's like, at the end of the day, we as the service provider should not be caring, not that should not be, but we should technically not be the ones caring about the business owner's business more than they are. Or if they're acting in a way that it's not good for them, like we should not be the ones caring for them a lot more than they are caring for their own business. So, so if we're putting all this energy in to help them out, and there's no, there's no understanding of the value received, then it's just energy wasted.
Yeah. It's an area that I know a lot of entrepreneurs suffer.
Yes.
And they suffer through the process, and at times what they need is coaching. You know what I mean? That investing, this is if you're going through this type of situation, the thing is that we have other type of counseling, either mental health. I have issues in my marriage, but we don't look at business. It's another relationship I have.
It is.
And you should be, if you're having challenges in your business, either be with your internal team or external with your customers and clients, you ought to be seeking